Hi, everyone, and welcome to the Amber Data Derivatives podcast. I'm here with Marc Tillement, who is the director of the Data Association over at Pyth. Marc, how are you?
Doing fine. Thanks a lot for having me today.
Yeah, absolutely. Very excited to have you on. I thought maybe before we jump into the details of Pyth and everything that's going on there, if we could just get a brief overview about yourself and how you got to where you're at, and then a little brief overview for anyone who's new to Pyth.
Definitely. So I'm Marc. I'm a 27-year-old Frenchman based in Portugal. Before crypto, let's say, and before Pyth, I used to work in the medical industry, so very different from what I'm doing today, specifically in the radiology business. I used to live in Hong Kong, so I mean, if you're a doctor in Hong Kong, you might have seen me walking around your hospital, trying to sell you contrast media. And before that, had studied in England, got a bachelor from Exeter. And I mean, studying wasn't much for me. I was very much like, I have to do something and I want to see the result. So just found a job, did this sales slash marketing for this big French radiology company in Hong Kong for 3 years. And in 2020, personally got very interested in crypto in 2019. Pretty much out of luck or karma, let's say, changing apartment in Hong Kong. I moved in someplace, and the other guy having the other room was actually OG BitMEX guy.
Wow.
That pretty much introduced me to crypto. Like I had heard about it like 2017, couple normie friends making money, but I wasn't ever a very finance guy. And overall, like picked up the crypto like vibe and lifestyle, like mostly driven from the philosophical or political ideas. Like in 2019, I didn't buy anything, or even early 2020. I was just reading stuff. And one, for example, project that like first thing that very like much got me excited was like Monero, having this whole privacy wrapper around like having finance, just like obfuscating stuff, having privacy, like clear value addition versus what we have in the current system, in the overall like underlying tech. Like blockchain can help us removing the middleman, and overall like middlemen kill everything, cost-wise, speed-wise, etc. So from this, I personally got very into crypto, and specifically DeFi. Not that I'm anti-bank, etc., but I'm more power to the people. Like people should have more power over their own finances. And pretty much, so 2020, like DeFi summer arrived. So while it was very wild, it was very cool to see all these the DeFi concept, putting it like under stress and under test. Like, is this working, etc. And it was fun. I mean, everything was going up, and it's funnier when everything goes up. To also started, and luckily, like COVID crash arrived, so I could invest my own money and get into the, let's say, classic, how we call it, retail crypto kind of user. You use the app, you buy and sell, etc. And overall, throughout my life in Hong Kong, met so many other crypto people, whether market makers, working at exchanges, protocols, and more it was like I spent more time on this crypto on the side rather than my regular job that pays me my stuff, etc. So very felt much like, okay, I need to stop doing this all night. And I mean, I still do this all night, but let's try to make it kind of my main gig. And I was lucky enough to hear about Pyth late 2020, early 21, from a Hong Kong friend that put me in touch with Mikey here. And pretty much the idea of Oracle. So I knew what Chainlink was, etc., etc. And I was like, this is a kind of a prime position for me that loves DeFi to join a project that's like paramount for most DeFi application. Like being an Oracle, you end up being available on so many chains, servicing so many users, DeFi apps. I was like, this is the perfect professional entry from my perspective. So joined Pyth early, I think March 21 or April 21. And so have been contributing to the Pyth Network for over 3 years now. I not tech at all. I barely know how to open my console on the PC. but I kind of like to still read the technical stuff. So very much like focus on day-to-day focus on the DeFi footprint for Pyth Network. So help all these wonderful developer teams, protocols, shipping killer product, and overall like representing the association. Like we have the Pyth DAO, so I'm still also quite involved in governance, whether within the Pyth DAO, also outside of the Pyth Network DAO.
Yeah, fantastic. And speaking of Pyth, so you mentioned Chainlink, which is one of the OG oracles on Ethereum. Can you briefly describe what an oracle does and why it's important, and how is Pyth different from Chainlink, and what is sort of the different approach to being an oracle?
Definitely. So first, from the Oracle perspective, you have to understand that blockchain by themselves are, let's call them pretty dumb. As in, they can only know what's like produced by them on their own chain. So until the first Oracle came in, it was pretty much purely like sending like value from A to B. Oracles pretty much enable blockchains to have what now we call smart contracts. So programmatic code that can do a various spectrum of action depending on arguably anything that could happen in real life. So an oracle's job is to overall source that data, and it can be any type of data. It could be financial data, could be weather data, medical data, like anything that could live on the internet, like anywhere. Like source this securely and be able to make this data available on chain so that applications, smart contract can actually operate based on XYZ inputs. So for example, there is always the weather, like example taken where you could have some African farmer that takes some insurance in case of floods. How does the blockchain know that his village, his country was overflooded? Thanks to an oracle that would source the data, verify it, and securely send it on chain. So very much, oracles are what make smart contract on blockchain smart.
Yeah, that's fascinating. And so, if I made the example like this, tell me if this is right. So, if I have a computer that's not connected to the internet, I can, manually upload a file with a USB drive. That's kind of like putting a transaction on the blockchain. But with an oracle, it's almost my connection or my internet connection to the outside world. And now I can import data from the outside world. And then it sounds like, and correct me if I'm wrong, but Pyth has a higher throughput solution. So it's almost like a faster internet connection to the outside world. Is that a way to think about it?
Overall, yeah, your computer example is perfectly correct. Like if you have your own file already, you upload it, it's fine. The thing is, most of the time, you don't even have the file to start with. So this is where usually the Oracle actually is the one giving you the file that you can upload. And yeah, so Pyth, why did Pyth come about? So throughout like 2020 and the early days of 21, like overall, we had so half the crew that contributes to Pyth is background, like traditional finance. And so overall, we have a deep knowledge of like an experience and of trading system. And overall in 2020, like when you were checking what was the derivatives landscape on blockchains, it was pretty sad. And when I say sad compared to what happens off chain. Like the first version of like synthetics that was launched like many years ago, I think at least 4 years ago. For example, you would have a 10 or 15-minute window for trade confirmation. Because back then, also kind of the first generation of Oracle, kind of with their design, their slow throughput, etc., you had to have kind of like trading safety measures so that like people could not front run the whole Oracle, etc. So usually like 4 years ago, if you were to trade like perps of Bitcoin, the fees would have been like 10x what we see today, and the UX would have been like 100x worse. So that was kind of in 2020, okay, the infra that like for proper DeFi is not there.
Mm.
So there is room, like while Chainlink back then had 100% market share, we still believe that there's room, a better infra that can rival, like, I mean, maybe not rival AWS speed of light, but getting closer to
Mm.
this is super valuable. And the other kind of eureka moment we had, like at the start of Pyth, was like, and actually revamps also how we see Oracle from our perspective. Till now, most oracles are usually I characterize them as generalized infrastructure. Like you ask a bunch of nodes, can you fetch me this data from this off-chain API? And overall, till now, oracles have mostly focused on the like observing the data, securing it, making it available on chain. One key aspect we found that Oracle project have missed was like, where is the data coming from in the first place?
Mm-hmm.
And like the weather, are you just hooked to like the weather channel API? But then like, well, you have all type of legal questions around reusing other people data, reselling it, etc. But it's also centralized still. Like you rely on a fully centralized data producing system, and overall you just kind of kick the ball down the road on okay, we obfuscated most of the issues. There's still the like who's creating this data in the first place. And for financial market, it's actually maybe would compete with medical data, but it's arguably the most valuable thing on earth, financial data. What's the price of Apple stock right now? If you know it before anyone else, you'll make like tons of money. And where Pyth differentiates a lot from other Oracle is this like legal discovery that who owns this financial data, who creates it. And what we understood and discovered was so exchanges, and we can take it's true for Binance, but true for NYSE or SIBO, they own their order book. So you as a trading firm, you put bids, asks, but still arguably the exchange is going to package the data and arguably resell it to you. So the order book owns, the exchange owns the order book, and they could derive their price as just midpoint, and the like potential slippage would just be bid and ask. And overall, like US stock exchange, they make tons of their revenue is from selling data. Like 30% of SIBO's revenue is selling data. Think reselling of the like market data business, I think it's like 7 or 8 billion per year in revenue. And this is actually where Pyth is more focused towards. It's not generalized infra of finding some type of data, putting it on chain. It's more like a data distribution model. And so I tackled the exchange part, but actually the real discovery is on the trading shop part. As a trading firm, so if you're in TradFi, you know that your company is likely spending hundreds of thousands, if not millions per year in subscribing to data services from all these exchanges. You might buy some more data, but trading firms actually create tons of data that are worth a ton. Why? So if we take the example of high frequency trading firm, like they're going to trade Apple stock every millisecond, pretty much on all these regulated exchanges. And trading firms actually own their fields. Like it's their own data, and they can do whatever with it after. And Pyth very much, let's say we were like, let's do it when we understood that. Like, okay, all the biggest trading firms in the world, they know the price of Apple at all time. And actually they have a way for them to kind of create a new revenue stream, resell this proprietary data they generate to somehow go compete with what the exchange are reselling, like this $8 billion industry. So that was kind of the eureka moment of, okay, we actually an edge, go to the guys that own financial data, have him to contribute. And so that's on the supply side, and on the demand side was like, okay, let's build the product so that it goes like the fastest we can.
Yeah, that's fascinating. So it really sourcing sort of the the truth of where the markets are priced, especially for financial data, from the various trading firms, and then essentially providing it to all sorts of DeFi protocols who would need sort of that data. One of the interesting things coming up a lot is, real world assets on chain (RWAs). How does Pyth sort of tackle that potential opportunity, or is there any interest there from the Pyth side?
Definitely. So like till now, I mean, most obvious connection with Pyth is today's main Pyth product or price feeds. So a DeFi app needs to know what's the price of ETH, of whatever assets they support as collateral, as trading, to just ensure that there is still like checks and balances on the protocol balance sheet, let's say. So Pyth already provides price feeds for many real world assets. So in crypto, usually when we mention the real world asset, it's going to be those tokenized treasury bills or whatever type of stuff. So like for this, whenever there's a market, like you can take the example of Ondo Finance USDY. So it's just yield bearing stablecoin. You can deposit USDC. They give you like USDY and it like accrue yield over time. Main use case and main value we provide to DeFi apps is that we have a Pyth USDY price feed available permissionlessly on 80 chains. So it's a mix of, from Pyth's perspective, is enabling real world asset issuer to get traction and usage on chain. So we're almost like more an enabler than us kind of picking, okay, we want this to happen, etc. We're very kind of doing what the market wants, because end of the day, infrastructure should just do that. Like you should just serve what your user wants. So from our end, like we, and I mean, I don't want to say it's like normal business, but like just supporting price feeds like these. One thing we see a lot also with proof of reserve is, sorry, not proof of reserve, with real world asset is proof of reserve type of product. Like I have X amount of fiat in my bank account. The bank wants to mint like a stable coin and just you want to ensure that they don't mint more than that they have in their bank account. So they are, for example, Chainlink's the leader in proof of reserve. So taking, let's say, observing what's written by the API and put it on chain. From Pyth perspective, we don't have such type of product because also we don't see that much value or there's value, but you're not solving that much of an issue. Like you're still relying on this centralized API. So the bank could just still, I mean, they could fake their API. So at this rate, our stance is almost the bank could just self-attest. You don't need to add arbitrary decentralized network on top of it because underlying still centralized. So overall, our main connection with real world asset today is like actually enabling those guys to get traction and activity on chain. And I think where one part, I think Pyth shines very differently than the rest of Oracle's in regards to real world asset, but not the real world asset as we usually mean in crypto, is thanks to this design of getting the exchanges and the market makers, the prop shop, the HFT to contribute directly their data. The network is actually able to get access to data that usually you wouldn't get access to. And by this, I mean like US stock data. If you go online, you check the Apple price, it'll be 10 minutes delayed. By law, it's like, and that's where all the money, like Bloomberg makes and all the exchange make, it's like you have to pay hundreds of thousands per year to get kind of a live stream of equity price feeds. With the design Pyth went, SIBO is a data publisher. Memex, IEX, Jane Street, Power, Cumberland. These guys know and are able actually to contribute what's the live price of Apple. So today, Pyth, I think the Oracle has about 75 US stock price feeds that are, and data comes from SIBO directly, comes from Jane Street, Jump Trading, etc. If the Oracle wasn't built so that these guys were publisher and could publish directly their proprietary data, we wouldn't be able to have equities for legal reason, or we would have to pay a ton of money and it wouldn't be profitable. So Pyth abilities in real world asset, I think one way Pyth could very much shift toward is almost this kind of Bloomberg-like where 10,000 of assets are tracked from your most exotic Brazilian equity to your biggest Chinese company. So it's more on the pricing of TradFi assets. Let's say where Pyth will shine.
Yeah, that's fascinating. And so when you're running sort of an Oracle network, there comes down the concept of consensus, and I think sort of like there's new concept of Oracle integrity staking. Can you kind of explain in broad terms, what does that work? How does that look, and what does it solve for?
Okay, yeah. So first I'll tackle, let's say, how Pyth, the Oracle work, and after I'll mention the OIS, the staking part. So Pyth as an Oracle, it runs on its own app chain. It's a fork of Solana. Solana was picked because most of the engineers knew Solana best, and the chain goes fast, etc. And the idea was to have kind of this specific, like, compute environment where for each publisher is also a validator of this app chain. So it's an app chain with like 100 validators. And each publisher, pretty much, every new block, every 400 milliseconds, they'll pretty much spam the chain with a transaction, say, okay, my current Bitcoin price is X, my Apple price is Y, etc. And on this app chain, you have a single smart contract that will receive all the inputs in the same block and produce you an aggregate. And these aggregates are what we're going to call the Pyth price feeds. Like if you go on the website, Pyth Network, you open any price feed, the prices you see are created from this app chain. And overall, so consensus of the chain, it's not the most exciting, but it's like Solana. The consensus maybe of the Oracle aggregation is more interesting, and it's specified in our docs. So it's just docs.pyth.network. Overall, the idea is as long as majority plus one of the publisher are accurate, the price will remain accurate. But also from our end, the design we picked to make this price feed the most reliable possible. And from there, so you can imagine that every 400 milliseconds, you have a new price that is created for all the 500 asset Pyth currently supports. And this forever. So that's how the Oracle works, how it creates prices. The staking part, so the Pyth network has a token, PYTH. It's a SPL, so Solana token. It was launched a year ago, pretty much. Last breakpoint, so Solana breakpoint 2023. So it's almost been a year. And the first utility of the token was governance. So this Pyth Oracle, fully decentralized, so that the Pyth staker or part of this Pyth DAO, and the staker have power over like the whole program. So contract upgrades, etc. They're all decided on chain by the DAO. And the second utility that was brought forward more recently, last breakpoint, this just recent breakpoint less than a month ago, is what we call Oracle Integrity Staking, OIS. And so this idea comes from the fact that, like, what if the Pyth aggregate price of Bitcoin is wrong? You're an app, the Pyth Bitcoin price is wrong, you use it. If you're bull lending, you're going to likely trigger liquidations that you shouldn't have. People are going to end up maybe with bad debt, or at least like collateral they shouldn't have, or just a guy could arrive, deposit, if the price is overvalued, just take an enormous loan and just leave you with bad debt. Mm-hmm. So that's pretty risky. That's pretty scary. When pretty much the fate of your bull lending down, like at the end of the day, lies down in the hands of the Oracle not being wrong, is pretty scary. There isn't much you can do to fully remove this risk, but you can reduce the risk, or at least reduce the financial kind of exposure or risk. And OIS aims to do that. So the idea is that publisher, and actually anyone, can stake its Pyth token into this OIS program, and you will stake it on top of a publisher. So you have 100 publishers to pick from. And the idea is that if ever the Bitcoin price from Pyth is wrong, the Oracle or the DAO will be able to first, like, confirm that the price is wrong. Like, okay, the Bitcoin price on Pyth was, I don't know, 1 million. On Binance, it traded at 60K at the same time. Mm-hmm. Pyth is obviously wrong. Then comes the time to find the publishers that were wrong and cause the aggregate to be wrong. And those publishers stake and the stake of delegators on top of them would get slashed. This slashed amount of Pyth token would go to the DAO, and after the DAO would be able to reimburse pretty much. So your app, you had, I don't know, maybe 10 million of bad debt because of the Oracle mistake. You'd be able to kind of go to the DAO and say, look, you left me with a 10 million note, please pay me back. So this is it's not insurance, but it's kind of like insurance. That's kind of the idea of OIS. And so this insurance-like is available on all the Pyth price feeds. So wherever on 80 blockchain plus you use Pyth, any feed you use, if it's wrong, you can come to the DAO, complain, say, look, your price is wrong, pay me up, and overall the DAO will verify the claim and pretty much pay you out if it was wrong.
Yeah, that's fantastic. So it gives a source of recourse for end users of the Pyth network to ensure that the prices that they're getting are accurate and that there's essentially some skin in the game for the network to make sure that's true. Cool. Well, thank you, Marc. Kind of wrapping up here, there's a couple just more final questions that I'd like to end on. One is, where do you see sort of DeFi and the need for, data on chain from an oracle in the next 5 to 10 years? Like, where do you see this going? And then lastly, what is the Pyth network roadmap for the next foreseeable future?
I think we're lucky in our position contributing to Pyth is that we talk both to chains and OG chains to newer ones, to protocol and to many protocols that are also kind of, should I become our own app chain, etc. What we've seen most recently we've heard it forever, or not forever, but maybe for last couple of years, chains getting faster. It was true with Solana. Sui and Aptos are Solana speed so it wasn't that revolutionary, let's say. But actually now it feels that we are entering the world where chains are actually getting real fast or real faster. Say EVM already, I think now, beating Solana quite easily on speed. You have Unichain that was recently announced on top of the OP stack, 250 millisecond block time. Orbit Chain says they can do even faster. We have Monad looming, Mega ETH looming. So we are actually seeing the real high performant EVM, real high performant EVM chain coming up. So I think we are kind in the intermediary state whereby you have, it's mainnet, but this first generation of L2s coming up, it works, everyone was excited, Arbitrum airdrop a year ago, or if not two, etc. Now it's kind of stagnating, it feels less new things popping up in DeFi. Now I think with the speed increase most EVM developers gonna get is gonna have them rebuild or reshuffle how their protocol operates, etc. So I'm very excited by this because some are just okay, it'll just go faster, it'll be cheaper. But actually, I think it's going to enable many newer cases, or protocols will be able to become 10x, 50x more performant thanks to this reduced speed. Because reduced speed is just pretty much as if you were out naked in the order book waiting to get sniped by some MM. So very excited to see those chains actually deliver on speed. Because also that's why at least at the Pyth Data Association, we believe overall, it's not we want to rebuild TradFi, but where TradFi is great is cost and speed. So we should strive towards matching this. Robinhood or Charles Schwab, it's free to trade. With payment for order flow, you can go trade there in a millisecond and it's free. I'm not saying we're all out there in DeFi to build the next Charles Schwab, but goal is to build something that can reach Charles Schwab ability. So I think this is where we're actually entering and going. So this is pretty cool. And how does, let's say, Pyth, let's say, look at it, or the network? How do we, let's say, get prepared? I mean, overall, we were kind of, I mean, I don't want to use another adjective. So let's use, we were lucky enough 2 years ago when we shipped the Pyth V2 that we had picked Solana, and pretty much it overall still the competing as the fastest chain. So all these EVM that are getting a boost in speed, they are still, let's say, within reach of the tech Pyth relies on today. So there is no fire under Pyth as in, okay, you actually have to better the tech, the underlying tech, to be able to catch this demand. There's still way to improve. Like Solana, during Breakpoint, you had Fire Dancer getting a lot of attention. Like Pyth Pythnet using like a Solana fork style, we could imagine that the next version could use Fire Dancer. Not so much because we need higher throughput, but more like reduced block time. So goal, as I mentioned, Pyth prices update every 400 milliseconds. What if we could keep this still like very decentralized app chain, but manage to get this chain at, I don't know, 50 milliseconds. And now you have, I mean, 8x improvement. I mean, things sound small within crypto, but would imagine that we wouldn't see any very decentralized chain managing to reach 50 milliseconds.
Right.
So overall, it's as long as the Pyth infra remains good enough that we can sustain the speed, overall we're fine. More broadly on the roadmap, so that's the general, some like it, some don't like it. But being a decentralized network, it's kind of hard to the roadmap. It's not like the founder in some room just writing a blog post on how things going to happen.
True.
So overall, I mean, the alpha is in the Discord. Like the staking part I mentioned, the idea was originated in the Pyth forum. So I think the website is forum.pyth.network. We have an idea bank section, and I think it was April or May, one of the publishers going to the Discord, to the forum, issuing this idea of Oracle integrity staking. I mean, it was proposed initially in a very different way, but nowadays it's for the Pyth DAO to choose what's next overall. And I mean, just ideas that were put forward from the community on the forum recently was like, I mean, people like tokens. So most of the ideas are around the token, but some were like, what if you use the fees the Oracle generate to buy and burn, or like buy, hold, whatever. So overall, arguably anything roadmappy would appear on the forum. There is no blog we can send you to for that.
Fantastic. And if listeners want to learn more about Pyth, where should they start? What's some good resources?
So website is pyth.network. On the footer of the website, you'll have about 50 links for everything. So if you're a dev, we have the docs down there, docs.pyth.network. The integration, everything usage is permissionless. So you don't even have to reach out to me, DM anyone to ask for API keys, etc. But if you're a dev, go to the docs and play around. Usually for more crypto-oriented people, we send them to our Discord. We have amazing community leads within the Pyth Discord, and it's pretty fun. I mean, I'm lucky enough that they're so good. I don't have to spend too much time there. But yeah, overall, so from the Pyth website, you have all the links, but Pyth Network on Twitter or X. I still have issues saying X. And I mean, we used to have a Medium, but on LinkedIn, like all the classic channels, Pyth Network, usually in one name, but best to start from the website, as you won't have like impersonator and fake links there.
Fantastic. Well, Marc, thank you so much for coming on. Very interesting. I'm excited to see where the future of DeFi and the Pyth Oracle network take us.
Thank you very much for having me, Greg.
Absolutely.
Have a great time.
And thank you to everyone who tuned in. We'll catch you next time.